Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Julie Hyman. Let's get to the three things you need to know today. First up, U.S. stock futures shooting higher on the heels of the Consumer Price Index report. The S&P 500 set to open at a new all-time high. This coming after the September consumer inflation report showed prices rose 3% from a year ago. Economists had expected them to rise 3.1%. The market is now baking in another rate cut from the Federal Reserve. Well, they already were. Now they're really baking in that cut. But beyond that, the future does become more uncertain with the lack of economic data. That's a result of the government shutdown. Plus, President Trump calling off all trade talks with Canada. The president announcing the move in a Truth Social post overnight, blaming an anti-tariff advertisement in Canada, which featured comments from former President Ronald Reagan denouncing tariffs. And Intel may be showing early signs of a comeback. The struggling chip company reporting better than expected third quarter earnings last night on improved chip PC sales and smaller losses in the foundry business. CEO Lip-Bu Tan saying on the conference call that the company is making steady progress to rebuild the company, but still has a long way to go. Let's get a check in on stock futures right now. We are seeing them strengthen after the CPI report, although off of the early highs. Right after CPI crossed, we were seeing the Nasdaq indicate gains of about 1%. Now that's about 0.8%. So we'll see how it shakes out throughout the session. But broadly, the number coming in a little more benign than had been estimated is giving some fuel to the market. Let's dig more now into our top stories of the day, to today's consumer price index and what that means for the Fed's meeting next week, and markets by extension, trade talks stalling out with Canada, and earnings from Intel. Joining me now, Yahoo Finance senior reporter Brooke DePalma, tech editor Dan Howley, and Federal Reserve correspondent Jennifer Schonberger. Brooke, let's start with you and this boost that we're seeing in the market after CPI.
Yeah, good morning. After 23 days of economic blackout, we're finally getting this data, and it turns out that investors are super bullish about what exactly this means, especially ahead of that key Federal Reserve meeting next week. All three major indices, the futures are pointing higher, led by the Nasdaq this morning. It's up about 0.8%. Slightly behind it is the S&P 500, really holding on to this momentum, up about 0.6%, and right behind is the Dow, up about 0.4%. I also do want to point out to the Russell 2000 because we're seeing a bit of momentum there, even the most momentum. It's up 1.4% this morning. So definitely keep an eye on that as well. And as Jared Brickley just pointed out in our program, the Yahoo Finance's Jared Brickley, is that the CPI report has been one of the most bullish catalysts over the past 3-year bull market. I thought that was really interesting stat there, and we're seeing that momentum hold on this morning. He also said that when the CPI report tends to have this bullish reaction, we tend to end in the green. And so fingers crossed for this bullish Friday morning. I also do want to take a look at the bond market because we are seeing both the 10-year and the 30-year fall on this with the expectation that the Federal Reserve will cut interest rates. Right now, we're seeing the 10-year T-note down about 1 basis point. We're also seeing the 30-year fall as well with a similar downward momentum, once again, based upon these projections. And also pointing out the Fed Watch tool from CME this morning. Just this morning, right after this report came out, we are getting, markets baking in a higher chance, even higher than before, that the Federal Reserve will cut interest rates at next week's meeting. Now, as you can see on your screen, a 99% chance for an October rate cut. And then for December, we're also looking at a 96% chance that markets are baking in. And we're beginning to hear some commentary. I just got a note from Art Hogan, and he said that this is good news on a Friday. The long-awaited CPI report came in a bit cooler than expected, and this clearly keeps the Federal Reserve on track. And so lots of momentum heading into this early morning.
Jen, I would love to get your take on all of this Fed talk. In the chat that we had earlier, just following the release, there was broad agreement that October cut, that's baked in, but then beyond that, we're not sure.
Yeah, I mean, like you said, next week, it's a slam dunk at this point. This cooler than expected inflation report keeps the Fed on track to cut. And just to dive into that specifically first, right, expectations are everything. We were expecting 3.1%. Instead, we got 3%. And I want to hone in on the core number because that is the number that the Fed looks at. It excludes those volatile food and energy prices, smooths out the data a bit. And we saw 3% on that. And that was a drop from 3.1% from the month prior. So that's progress. Yes, we're still a full percentage above the Fed's 2% target, but that is progress. And then looking month over month, the core actually looked better as well, clocking in at 0.2%, an increase for the month of September. But that was after rising 0.3% in the preceding 2 months. So perhaps inflation's starting to move in the right direction. One report doesn't make a trend, but maybe Fed officials will find a little solace in this. But this is the only piece of data that they have gotten from the government during this government shutdown. And they still don't have that all-important September jobs report. So they're flying a little bit in the dark here. And it is the job side of the Fed's dual mandate that Chair Powell and many others on the committee have said that they are more concerned about at this point. Powell stressed that there are increased downside risks to the job market as he spoke last week, implying that a rate cut was on the table, was a possibility, even though he said we're going to take things meeting by meeting. Today's data seems to tilt more towards the job market, given the private sector data that we have seen, right? ADP showing just, 32,000 jobs created in the month of September. If you looked at Revelo's, which is a newer measure of the private sector job growth, if you combine the two surveys, we actually only saw job growth of, I believe, 13,000 in the month of September, which is incredibly weak, not moving in the right direction. Beige Book showing anecdotal evidence that the job market also deteriorated this fall. So it'll be nice to see if we get some more data on that part once the government shutdown ends.
Well, this little, the darkness that we've been operating in, which, we got a brief reprieve from today. It seems like it's still going to last. The government shutdown is continuing, and the White House is saying today that there will likely not be another inflation release next month. The one that happened today just happened so that those cost of living adjustments could be calculated for Social Security. So that's something to keep in mind. This might be the last thing that we get for a long time. In the meantime, what we are getting are more headlines on trade. Jen, we had the president getting annoyed at a commercial that's running in Canada featuring President Ronald Reagan talking about tariffs, and he says talks with Canada are off.
Yeah, every day there's something new with this administration on the trade front. Just when you think that we're getting more certainty on tariff rates, which will help businesses, something else breaks. And so when we look at markets, I think the Fed actually acts as somewhat of a tailwind for the markets, but it's really the administration and trade that remains the wild card. So while everyone is so focused on the Fed meeting next Wednesday, I think it's the meeting with President Xi Jinping that will probably happen Wednesday night, our time, that's going to be the major event to watch next week. We'll see what happens with Canada. President Trump typically ends up talking to many of the leaders of these countries and eventually smooths things out. But this is obviously another hiccup in this process.
And finally, let's get to the big corporate news of the day, which is those Intel numbers crossing after the close yesterday. Dan, as Lip-Bu-Tan said, there's still a lot of work to do, but the market seems relatively encouraged.
Yeah, the market obviously very excited from what they saw. You can see shares are up in pre-market almost 6% on the news. They beat on the top and bottom line, $13.7 billion in revenue, adjusted earnings per share of 23 cents. They also saw a slightly wider loss than anticipated on the foundry business, but it wasn't nearly as bad as last year, this past quarter. So they're making progress. There were a lot of good signs when it comes to sales on the PC business, as well as the data center AI business. The PC business, kind of a tailwind for them, is that there's a Windows end of life. The end of service for Windows 10 has come and gone. That was earlier this month. That means that Windows 10 is effectively, no longer going to be receiving major updates. So that's going to push more enterprise customers towards Windows 11 and presumably eventually consumers. And so that's going to give a boost to the PC side. The AI data center side, that's also getting a boost just from the broad build out of data center. They also announced new chips just last week. They have a new PC chip as well as a new data center chip there, Xenon 6 Plus. Those are both based on their 18A technology. Now, the issue with Intel is that, sure, they have 18A finally getting ready to ship, but it's not going out for third-party customers that they would use with their foundry business. They are going to wait to do that with their 14A process technology. And so we just don't know when that's going to come. When they're going to get a big customer. There were prior announcements that they had reached agreements with Microsoft and Amazon to produce chips for them. We haven't heard anything else about that since then. But this is obviously a good sign for them. They did do a number of layoffs during the quarter and previously. So, they're cost cutting and they're trying to turn this massive ship around. They obviously got those big investments from the U.S. government, NVIDIA, SoftBank. We just have to see now if it continues on this path.
Dan, Brooke, Jennifer, thanks so much. Appreciate it. Coming up on Morning Brief, we'll bring you today's top trending tickers and count you down to the opening bell. We'll be right back. Now time for some of today's trending tickers. We are watching Target, Deckers, and Procter & Gamble. First up is Target. The retailer said it will eliminate 8% of its corporate roles. That reduction will be done through layoffs and eliminating open roles that it had been hiring for. The announcement comes after several years of underperformance and market share losses. Analysts on Wall Street view the cuts as much needed and show its new CEO's willingness to act with urgency. The share's up slightly. Next, Deckers, the company that makes Hoka running shoes and Uggs, slumping after earnings. Its sales guidance missing Wall Street expectations. Deckers expects customers and consumers to act increasingly cautiously over the next few months as the full effect of tariffs and higher prices come to the U.S. The company forecasting full-year sales of about $5.35 billion. And Procter & Gamble, topping sales estimates in the latest quarter. Both volume and sales increased more than expected for the company's beauty and grooming categories, but the company's baby, feminine, and family care segment reported flat volume for the quarter. P&G reiterated its forecast for all-in sales and earnings for the fiscal year. However, its CFO did say the consumer environment is not great, but stable. And we will be hearing from P&G a little bit later. You can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Well, U.S. stocks are rising as the September CPI report cements investors' bets on a Federal Reserve rate cut at its October meeting. Joining us now, Omar Aguilar, the Schwab Asset Management CEO and CIO. Omar, it's great to see you. So, seeing this report, does this sort of put inflation concerns to rest?
Well, one data point doesn't make a trend, so it is clear that the stable picture of inflation is something that the Fed will probably take this report as a positive. It's something that they are expecting to use as part of their decision next week for rates, and that should actually put their focus on the labor market. They obviously have continued to see the trends. This is a very good indicator that at least inflation is under control, but still not close to their 2% target. So I think their big decision is not only, how much they go in monetary policy easing, but also how much longer do they do it? Do they do it just, twice this year, or they continue going into 2026?
Well, and they're doing it, and we're all sort of operating with whatever analogy you want to use, in the dark, with both hands tied behind our back. I don't know what you want to call it, not getting the data that we normally get, Omar. So as somebody who's in the market, how do you make your investing decisions? This was a one-off today. We're probably not going to get another one of these for a while.
That is indeed the case. Normally what we try to do is obviously deal with uncertainty, and we have to evaluate what are the different pieces that we have, putting all the different pieces together to try to estimate what we might be looking at the data and understanding that there's going to be a prediction error or anything that we do. Yes, we're probably not going to see another data point for the rest of this year on CPI, on inflation, and we will have to look at extrapolating areas like, for example, what are the earnings reports telling us? The earnings that are coming into, the current season will tell us that, there's losers, there's winners, there's companies that are passing through those price increases to the consumers. There are other companies that are taking it because they had a good profit margin and therefore they're trying to, keep their prices lower. So we're trying to just look at all the different pieces to estimate what will be the impact on inflation. We'll look at trends in housing and looking at trends in rents, trying to look at trends in commodity prices to try to extrapolate what would be the trends in inflation. And so far, our research suggests that inflation will probably stay stale for a little bit. Doesn't necessarily seem to be going, down or up enough. A lot of that is because the implications of tariffs have not really gone through inflation numbers. That, again, could be just because it's absorbing earnings, but certainly, something that we continue to watch.
I mean, it's showing up in some places, right? I just saw somebody pointing out on social media, audio equipment prices, for example, have gone up because they're subject to tariffs. Furnishings have gone up; they're subject to tariffs. So we're seeing it in little areas, and I shouldn't say little; I should say isolated areas. It also comes to the sort of jobs data that we're getting or not getting. And I can't help but noticing on an anecdotal basis, we have Target cutting jobs, we had Ford cutting jobs, Meta, Rivian, so a lot of jobs cuts coming from individual companies. And if we're trying to use individual companies as another proxy, what do we take away from that?
The job market is clearly in this soft patch. We have been all this year looking at these, I would say, very unique balance between supply and demand. On one hand, the supply of workers has actually been reduced because of just the demographics and aging population and immigration policies that have reduced the supply of workers. And on the other hand, we have seen probably a little bit of more cautious way to add new jobs for companies as a result of uncertainty of trade policy, also as a result of potential, deceleration of the economy and the AI productivity gains. So when you put that balance, that's where we've been in this market of the labor market being in this no hire, no fire situation. But I think that has started to change. As you pointed out, there are certain companies that, will prefer to keep their margins higher by not increasing prices, but at the same time reducing their costs and therefore, reducing their workforce. On the other hand, there's other companies that will probably, had a lot of capital expenditures early that they didn't deploy, and therefore this may be the time for them to start hiring, workers because they did have a lot of capex that was not, fully utilized as a result of the uncertainty on trade. So we're going to see how this goes. But what we, think in our research is that the labor market is going to continue to soften, and it's really just how much the Fed helps in terms of stimulating the economy for that to recover.
And Omar, the other thing I wanted to get your take on is the sort of signs of froth in the market. As you know, there's been a lot of talk about whether there's been sort of over speculation here. What do you think?
Well, we have been discussing this with our clients, this year, but in particular the last 3 or 4 months, because, it's the story of the overly concentrated market in 7 stocks, has been going on now for a few years. And we have encouraged our clients to start diversifying, going into other parts of the market, because the headlines that we normally get in terms of valuation and in terms of just index performance, they're probably not representative of everything that is going on market-wise. So there's a lot of cross currents under those circumstances, a lot of rotation that is happening. The example that we provide is that, even though the indices have experienced some volatility over the last couple of weeks, underneath the surface, we had seen quite a bit of, momentum strategies going high and low very quickly. Just a week ago, certain parts of the market, underperform significantly. And when you look at areas like small cap, there's significant amount of low quality, volatility going into those areas. So we do think that these are signs that the market is getting into a place where, investors are starting to just figure out that they need to start changing their strategy, not necessarily just going for the momentum trade. And the momentum trade is something that has worked, for a long time now, but it's also very risky to maintain that level of exposure to momentum.
Right. Momentum works until it doesn't, and then maybe it really doesn't, but we'll see. Omar, thank you so much. Good to see you. Coming up on Yahoo Finance Opening Bid, our executive editor, Brian Sozzi, the host of that program, is with us now. What's going on there,
Julie,
I see that little smile.
Did I hear this right? You are, complaining is not the right word, calling out beef tenderloin prices? I'm seeing you eating leftover chuck steak and ground beef.
My husband's birthday is today.
Oh, I didn't get those details. Okay, happy birthday, Howie.
So I splurged on a little beef tenderloin to make for his birthday dinner.
Okay.
And I sticker shock, like,
all right, well, Howie's a good dude. I didn't know if this was an everyday occurrence. You're sucking down beef tenderloin, Julie. All right.
Definitely not. What are you doing on the show today? You going to talk about beef prices?
Actually, yes. This is going to be my thread throughout the show. In between two big interviews, P&G CEO John Mueller, his last earnings report as CEO. He's handing the batons to his successor on January 1st. Talked to him a little bit about inflation, how many loads of laundry people are doing. And T-Mobile's new CEO came in to Yahoo Finance talking about AI and the future of cell phones, Julie. No tenderloin mentioned in either interview, though.
You never know what could
Happy
happen.
birthday, Howie. Howie's a good dude. He deserved that tenderloin. Good for him.
Oh, thanks. Thanks for that. I'll share that with him. All right, that does it for Morning Brief. You got Opening Bid with Saz coming up.